Welcome to Ask the Expert, your go-to source for personal finance and business insights. I'm your host, Nicole Pride, and today we are focusing on the critical topic for entrepreneurs, preparing to file taxes. With December 31st just around the corner, we want to help you ensure your financial house is in order. To help us navigate this essential conversation, we've invited an expert who is dedicated to helping business owners gain clarity, control, and confidence in managing their finances. Carletta Beckwith, founder of Carletta O Beckwith CPA LLC, is a certified financial planner, a certified public accountant, and a certified money coach. Yes, she has all the credentials. Carletta has a passion for helping entrepreneurs and business owners transform their financial futures. Carletta works with businesses to implement predictable systems that manage cash flow, analyze financial data, and minimize tax liabilities, giving business owners more control over their money. Carletta's expertise in tax planning and financial analytics and business strategy has helped countless entrepreneurs keep more of their hard-earned money. With the fiscal year end approaching, she's here to guide us through the key components of tax preparation and planning. Welcome to the show, Carletta.
Wow, that is such a great introduction. Thank you. I'm so happy to be here.
You are very welcome, but very deserving. Like I said, you have all the credentials, right? So CFP, Certified Financial Planner.
Yeah.
CPA, Certified Public Accountant, and you're a money coach, certified. Awesome.
They didn't all happen at the same time, but yes,
right.
I furthered my education to help my clients. Yeah.
So, well, then let's talk there. Let's start at the beginning. So, why did you jump into entrepreneurship?
That is a great question. I'm asked that all the time. But you know what, Nicole? I actually stumbled into entrepreneurship.
Really? Okay.
Yeah, it wasn't something that I intended, right? It was something I did not have that modeled at home. None of my parents are entrepreneurs. Mm-hmm. So I just remember getting my first job after I graduated college. Mm-hmm. And I was at the water cooler. I was talking to my colleagues, and they were so excited. They were so excited about the weekend. Mm. But yet it was Monday. And I said, whoa, what is going on here? Yeah. I felt so conflicted because here it is. I'm a first generation college student.
Okay. Yeah.
First in my family to graduate from college. Mm-hmm. So I was supposed to be happy. I was living my dream, right? I went to school for accounting. I was working at a big 6 public accounting firm.
And what was your role in that first job?
Auditor. Mm-hmm. You know, I slaved like an otter, but it was a good time. 100-hour weeks, but I paid my dues. Mm-hmm. So I should have been happy, but I wasn't. Mm. And so I was confused. I thought I had made a mistake. This is my first day, Nicole.
Your first day?
My first day.
And you felt like that?
I felt like I had made a mistake.
Okay.
So I said, God, what do I have to do to get out of here? Mm.
That was scary.
And that's how entrepreneurship was born. Not this specific entity, but entrepreneurship in general.
Right. So you must have had something within. I think if you knew on your first day of your very first job that was not it, and you wanted to be an entrepreneur, then, hey, there was something within. But, okay, so that's great. So,
well, let me just say, it was really... what I saw in it was the ability to be able to control my time, right? I wanted some freedom over my time. I knew that when I was to have a family, that I wanted to be able to be there present and not have to ask for permission. And then I also wanted to be able to control the amount of money that I made. Mm-hmm.
So I love that. So a motivator was more autonomy over your schedule. And so does more autonomy over your schedule mean that you have more time, or you can just kind of control your schedule, you know?
You can control it. Mm-hmm. So I think that's the myth of being an entrepreneur. Mm-hmm. People think, oh, they're going to live this high life. It's hard. Mm-hmm. It is hard sometimes. Sometimes you don't know when the money is going to come in. Sometimes the money comes in very fluidly and overabundance of it, and sometimes it doesn't. Mm-hmm. So sometimes I think our young entrepreneurs or small business owners are in love with this sexy idea of entrepreneurship that really doesn't exist. So yeah, it is definitely the control of the time.
So thanks for that, because the goal of today is to help entrepreneurs with tax planning, but I'm sure there's aspiring entrepreneurs here. So giving them a wide-eyed perspective about entrepreneurship is so key. And something you just mentioned, so it sounds like you're talking a little bit about cash flow, so that it may not be a steady stream of consistent income. And so if that is the case, how does one prepare for that so that, the bills are consistent, right?
Oh, they certainly are.
Yeah.
So that's why I tell anyone who wants to be an entrepreneur that you should probably have some sort of savings, some reserves put aside, because if you want to be on the conservative end, I would have at least 1 year. Give yourself the opportunity to do that stress-free. And the way that you do that is with your reserves. So I say have a reserve so that you can succeed. So that is a big thing.
And so that reserve, you think that entrepreneurs should have that before they even launch the full year?
I think so. That's being conservative. I mean, if you know that you're getting into a business which you are going to generate cash and generate a profit more quickly, then maybe not so. Right? So our services businesses, we have low overhead. So we can tend to turn a profit quicker than someone who is selling a product per se. Or someone who just has large overhead.
Thank you for that insight. That was helpful. I'm sure for our aspiring entrepreneurs, that gave them some things to think about for them to move forward. So now let's shift gears a bit.
Okay.
So we're talking about tax planning. So here we are, December, and soon the end of the fiscal year for most businesses. What should businesses be doing right now?
Great question. So the first thing that they should be doing is making sure that their books are in order. Okay. Recording all of your transactions, making sure your cash transactions, your cash expenses are recorded in your QuickBooks, in your Xero, whatever accounting software you're using. Or if you're using Excel, but write it down, track it, please. Make sure that you're scanning your receipts. I tell people that you have to prove your receipts if you are audited.
So some people would say, oh, well, I have my bank statements and everything's documented. Is that good enough?
That is not good enough. And that is a great question, because that is the myth. I have a lot of clients that come to me and they think that the bank statements are sufficient or the credit card statements are sufficient. But no, the IRS does require the actual receipt. And just know that the ink on those receipts, they do fade. So it is going to behoove you to scan those receipts in and make sure you're keeping track of all those digital receipts as well. And I tell my clients, listen, when you have the opportunity to get a digital receipt versus a printed receipt, get the digital receipt. File it, save it on a Google Drive or OneDrive, have it by month. Therefore, you are audit proofing yourself, right? So you're getting your books in order. Make an appointment with your CPA. Make sure that you have a projection and you know what your tax liability is going to be, because we can do so much now before the tax year ends than we can do when the tax year actually ends. So I tell my clients there are 2 tax seasons.
Okay.
There's the tax preparation season, right? Everyone's familiar with that. That's when we compile our income, our expenses. We look at our deductions and our withholdings, and we have to decide, okay, well, this calculation is going to tell us, did we overpay or did we underpay? If we overpaid, we're going to get a refund. If we underpaid, we're going to owe money, right? And so during the tax preparation phase, there are minimal tax deductions that you can implement, or tax strategies that a small business owner can implement. However, in the tax reducing season, that's the other tax season. That's where the magic really kicks in.
Okay.
Right? So that's where you can really hunt for those expenses. You can implement a tax plan. You can put into place all these strategies to be able to control what you pay. Because we all have to pay taxes, right? But we all want to make sure that we only pay our fair share of taxes. Not a penny more.
Yeah. Amen.
It takes out a big chunk of our profit.
Yeah.
Small business owners. And listen,
Right.
the IRS, the U.S. Department of Treasury, incentivizes small business owners to go into business. And why do they do that? They do that because we are providing a benefit in need. Did you know, Nicole, that small business owners, according to the SBA, small business owners actually employ 47.5% of the private sector? So they need us. We are critical to the economic growth, to the job creation. So what does the IRS or the government do in return? They incentivize us with tax deductions.
Okay.
And these tax deductions are very broad. So they can be, the IRS code says they have to be ordinary and necessary. So broad. Ordinary, meaning that it's customary to your business.
Right.
Necessary, meaning that it's useful and helpful. So basically anything that you expend for that business, more than likely is going to be deductible.
Right.
But if you don't have a good grasp on that, you don't have someone guiding you, then you may not know that. And you may be missing out on a lot of deductions.
So you bring up a few good points. The last one, the potential of missing out because you don't have a professional. So for a small business, for someone that says, I'll do my DIY, taxes, opposed to getting a professional, what would you say to that person? Like, when do you decide that you actually need a professional accountant?
So I tell people this, you don't know what you don't know. So, but I am very sensitive to bootstrap budgets, right? I started with one. Many entrepreneurs do this. But just know the cost of a CPA is going to pay off probably within the first year. Because you miss a deduction here and there, then you are potentially missing out on tax savings, tax deduction. So that means that you're paying more than you should pay, and you're not keeping your hard-earned money.
So you mentioned that, even in the beginning with your business, you were bootstrapping and you had to make those tough choices about what you would pay for, what you would do yourself or outsource. So were there mistakes that you look back on, even with your accounting background, that, you would advise others not to do?
Oh, absolutely. So I think as an entrepreneur, like or small business owner, we think we can do it all, right? That's sometimes that's our motivation. We feel like we have to figure it out. We have to figure everything out. And so I think when I'm looking back at my entrepreneur road, I say, maybe I could have hired somebody sooner, right? Because it's so much easier to rely on the expert, right? The expert knows exactly how to do that thing and do it more efficiently than you can. So you don't have to do it all. You don't have to take the time to figure it out. So I had to figure out everything. I was the website developer. I was the procurement person, right? I was everything. I mopped the floor in the place that I leased. So to not have to do those things and to be able to actually focus on what you're good at, your core strengths. Like looking back, I definitely would have hired somebody much sooner.
So that's great advice. So for taxes, so right now it's the end of the year. So you're advising folks, go through all of your receipts, document your receipts. What else should they do?
So like I said, meet with your CPA because you need to determine whether or not you have a tax liability, right? We can't hit a target that we don't even know exists, right?
And what are some examples of tax liabilities?
So meaning when you file your income tax return, you're going to owe money. So when we compile all of your income and your deductions, and now I'm going to look at a projected tax return for you if I were your CPA. And I would say, hey, Nicole, based upon this projection, you're going to owe $20,000 in federal income taxes if we don't implement some tax strategies.
I reject that statement.
Not wishing that on you,
Yeah.
but I'm sure you don't own that because I'm sure you're doing your estimated tax payments. But that's one thing that small business owners need to make sure that they're doing is paying their estimated tax payments.
Right. Yeah.
Right? And they are due quarterly, April, June, September, with the last one being due in January of 2025. So making sure that they're current on those things, because if not, guess what? That can result in a huge, we all like surprises, but we don't like a tax bill surprise, right? So that can result in a tax bill. So we want to make sure that small business owners are paying their estimated tax payments. But once we've determined what it is, like if you actually do have a tax liability,
Right.
now we're equipped with the information to make and implement some plans. So if I know that this year I'm going to have a tax liability, then I may want to accelerate some expenses in this tax year. So what do I mean by that? Say in January, I was looking at going to a conference. I may actually,
I see.
or doing some training that I could do self-paced. I might do that in December because I want to accelerate that expense. If I am a business owner that has payroll, I might want to pay myself a bonus and maybe my employees as well. So those are some examples of accelerating some expenses. I might have some equipment purchases that I might need to make, right? I might need to replace a van, a work van, and maybe I'm going to do that this year because it's going to benefit me. Also, you can look at that from an income perspective. If there's a contract, say I just signed a new client, I'm a consultant, and I say, well, I really don't need that income this year because I already know that I'm facing this $20,000 tax bill. I'm going to look to defer, do that work in January.
Yeah.
And make sure that's okay with the client.
You don't want to lose the
Don't
contract.
want to lose the contract. Don't want to lose the client. But those are some of the things that I could do. Also, I would be looking to my retirement contributions, my defined contribution plans, making sure that I'm maxing out that. Now, as a small business owner, that is the beauty. You can really do some magic there because if you have a 401k plan as a small business owner, you can defer, you could do your salary deductions, and that deferral, you can defer up to $22,500 in 2024 if you're under 50. If you're 50 or over, then you can do $30,000. But for employer and employee contributions together, remember you're both the employee and the employer, you can do up to $69,000.
Look at those tax nuggets there. All right, come with it, Carletta, come with it.
And it doesn't stop there, because if you really you need even more expenses, you can do a defined benefit plan. Defined benefit plan is your, i.e. your pension, right? And so you can do up to $275,000 in a defined benefit plan for 2024. This amount changes every year because it's indexed for inflation. So it goes up a little bit, each and every year.
That was great. Thank you for that.
Welcome.
Okay, so what can businesses do now to position themselves well for 2025? So, the damage for the most part has been done, except for those little nuggets she gave us. There's still time. But to, not to have to do some last minute finagling, but to help with not just the cash flow management, but just, I don't know if there's operational things or bookkeeping things that people can do to help position them well for the next tax season.
For 2025. Yes. So what they can do, so say if I am using a general ledger, a paper ledger, I still do have a couple of clients that bring me a paper ledger. So each year I say you should look to implement a new system or strategy, just one thing, right? If we get better incrementally, then that's more sustainable change, right? As opposed to if we're inundated and we just feel like, oh my goodness, this is daunting, which it can be for business owners. So if I am using a paper ledger or if I'm using Excel to track my income and expenses, I might now for 2025 look to implement a tracking software like a QuickBooks, like a Xero, like an SAP or Sage or something of that nature. So I might look to improve upon my systems. I want to make sure that, again, it's all about record keeping. I have sat in so many audits, examinations on behalf of my clients. And the ones that were super successful were the ones who listened and they maintained their records, they maintained their receipts. So I cannot stress enough the importance of record keeping.
Okay.
Because you don't know, Nicole, I have sat with so many small business owners and we are at January 15th or February 15th, whenever we're compiling their income tax return. And I'm having to create with them the financial statements that we need for tax preparation. Right?
Right.
From the bank statements, from the invoices, and everything of that nature. And I just think you do yourself a disservice, not only for tax purposes, but you are the CEO of your business. So you have to treat your business like it's a Fortune 500 company because one day it will be, right? And so with a Fortune 500 company, with the CEO of Amazon or Meta or any of these major 500 multi-conglomerate companies, would they wait to compile their records and track their income and expenses when it's time to file taxes? No.
Right.
Because you need to know if you're profitable. How do you know if you're profitable? How do you know if you're meeting your sales goals? So let's start to get those processes in place where we're setting goals, we're making budgets, right? And we're implementing systems.
That was so helpful. I think, for those who are using Excel and not the more sophisticated software applications that do all of those projections for you to help you manage your cash flows, to help you develop financial projections for the next 5 years. Yeah, I hear you. It's really a disservice to them for not using those programs. Now, other than documenting or a lack of documenting, are there other reasons why someone may get audited?
Oh, well, yes, random. A lot of the auditing is random. And then also, if you make over a certain threshold, you're more likely to be audited as well. There's a computer algorithm that looks at different inconsistencies, that looks at what we call red flags. And so if you're that lucky person, it's going to spit out.
Right.
And you may be audited. But I tell people, don't get so nervous. Like I find, Nicole, people don't like to see me. And I don't take it personal. They actually tell me, I don't like coming to see you. And it's because...
Well, gee.
Right.
Yeah.
I don't take it personal. I know that it's just because they're very stressed.
So I really want to emphasize what you just brought up. That stress that business owners feel, that's real, right? So there's the day-to-day operations stress that business owners go through, but then that extra angst surrounded by submitting your taxes, I think a lot of people feel like that. And I think maybe the underlying reason is they know they haven't kept up with the documentation that you mentioned, but then also the feeling that they're not doing what they need to do, or maybe not fully understanding what they need to do to maximize their savings. And so what do you say to that business owner?
I say have you ever heard of the 5 Ps?
I don't know, maybe.
Okay. Proper preparation prevents poor performance.
Okay.
So I say, work with someone that you can trust. If you don't want to work with a CPA or a tax professional, maybe a mentor. They can show you the ropes. Make sure that your books are tight. Make sure that your books are up to date. Make sure that you've scanned your receipts. Make sure that your paperwork is in order. You've recorded everything. Make sure that you're paying your estimated tax payments. Because this way we don't have that surprise. A lot of that angst comes from because we don't want to owe money. Who wants to write a check for $20,000 to the IRS?
Not I.
Right. So that's why I tell my clients it's either you pay yourself or you pay the IRS. So let's develop some tax strategies so that you're paying yourself, whether you're contributing to your retirement plan or maybe you're making some additional expenses. So the more prepared that you are, I think the less angst you feel.
And so, do you recall a time when you had a client come to you out of exhaustion because, you know, they've been maybe doing DIY themselves or, you know, it just didn't go well for them in the past?
Oh, yeah, many of them. I have many clients that come to me that say, oh, I used to do my income tax preparation on TurboTax. And I say, oh, goodness.
I think that might be a lot of people's stories. So explain why that may not be the best way to go.
Well, so I think what a lot of people don't understand is that TurboTax is only good as the information that you put into it. So you have to know how to answer those specific questions. If you don't answer them correctly, then you're not going to get the output, the correct output. So what that means, and because you don't know the tax code, you don't know how to check it. So therefore, you don't know what you don't know. So you answered this question incorrectly, which led you to another question. But in the process, now you have eliminated a deduction that you were entitled to.
But do you have an example of a common mistake in that area?
TurboTax. I can't really think of one offhand.
And so for those programs, you know, they tout that they have the latest updates about tax codes. But what I hear you saying is not just having the information about the tax codes, but really that extra layer of analytics to really get to the heart of what the question is asking and knowing how to reply to it.
Oh, absolutely. Absolutely. So they definitely do have the most up-to-date information, tax codes, because I don't know if a lot of people know, but TurboTax is owned by Intuit. And Intuit also makes the professional software that I use as a tax professional, as a CPA.
Okay.
Right? Pro Series, Lacert, all of that. So they definitely they're very credible, they're very known in their space, but yes, if you don't know how to analyze what that question is actually asking you, it's like, it's only good as the input and the information that you supply it with. So, yeah.
Okay, so in our final time together, I just want to make sure that our business owners have a clear path that they should be taking, right? And so right now, in December 2024, is all about going through every purchase you've ever made in that fiscal year and making sure that you have documentation for that.
Make sure you have documentation for that. Also making sure that any cash transactions that you have made are recorded and reflected in your financial software, your tracking system. A lot of people leave out their cash expenses. You want to make sure you paid your estimated tax payments. Because we don't want an unlikely because we don't want a surprise.
Right. So documentation, and we want to make sure that you pay your taxes already. Okay.
And we want to make sure that we plan, right? We want to plan because right now we are equipped to be able to make some changes, lots of changes that we need to be able to offset our tax liability. Once January 1 comes, we're going to be limited to what we can do. For instance, we cannot apply an expense to the prior tax year in January.
Right.
So we need to make expenses. We need to buy some equipment. We need to purchase vehicles. We need to purchase office supplies or things of that nature. We need to do that now because we need the deduction now, right? If we've determined that we have a tax liability, if we need to defer income, if there are securities that we have sold in our from our stocks, and we're going to have these gains. We might want to do what's called tax loss harvesting, meaning we want to, if we have other securities that are at a loss, we want to sell them that are at a loss because then they're going to offset those gains. So we want to make sure that we implement that as well. We want to make sure that we maximize our retirement plan contributions. As a small business owner, you are equipped with the ability to be able to really create some magic there just because of the amounts that you are allowed, permitted by the code to actually contribute. And then you want to make sure you take advantage of the tax credits, right? We have not talked about this, but there's a difference between tax deductions and tax credits. We prefer tax credits over tax deductions, because a tax credit is going to reduce my tax liability dollar for dollar, versus a tax deduction is only going to give me a partial deduction. So, for instance, if I have a $1,000 tax deduction and I'm in the 28% tax bracket, that $1,000 tax deduction is going to reduce my tax liability by $280. But if I have a $1,000 tax credit, that $1,000 tax credit is going to reduce my tax liability by $1,000. So you see, vastly different. So we want to make sure we take advantage of all the tax credits that are available to us as well. There's a work opportunity tax credit. That's a tax incentive that the government gives to us when we employed what I call people who are overlooked as the first pick when it comes to employment. Those are our veterans, our long-term unemployed people. That's defined as someone who's been unemployed for 27 weeks or more. And also by employing people who are on government assistance. We can get tax credits for that as a small business owner. We can also get research and development tax credits. So we have a manufacturer, a food and beverage, an engineering firm for the costs that we are expending to improve upon our products, our processes, our software. R&D credits, right? So we can get a healthcare credit if we have fewer than 25 employees.
Yeah. So this is great. And so, don't give me the evil eye, but for those DIYers who said, okay, I'm still bootstrapping and I can't get the professional person at the moment, how can they find out about the tax credits? Are they listed on the Treasury's website, or?
I would say go to irs.gov. There's a plethora of information there. That's the most credible and reputable source. Of course, you can Google. Sometimes Google is incorrect. You can use AI, ChatGPT, but sometimes that's incorrect as well.
Yeah. But it is publicly made available. Yeah.
It is through the various publications and everything like that. So they can definitely use that as a tool. And also a mentor. Join a community of other small business owners. Right? Because people share. And they share, maybe those small business owners actually have a CPA. So they're sharing what worked for them. So that's what I would recommend to the DIYers.
Okay. So this is great. So how can people find you, Carletta? Some people right now may say, hey, I want her to be my CPA.
So they can find me. My website is www.beckwithcpa.com. So that's my last name, cpa.com. You can email me as well at carletta@beckwithcpa.com. I'm located locally. If you're here in New Jersey, you can just look me up. But I'm here in Somerset, New Jersey.
Okay, great. Yeah. Well, thank you so much. This was helpful. I know that people were taking notes especially as you were dropping some gems. And we are just grateful that you took time out, and I wish you strength as you're about to approach your very busy season. But thank you.
Thank you so much for having me. It was a
right.
pleasure.
All right, so that concludes our episode of Ask the Expert. We're so grateful to our sponsors, Prudential, that power our episodes, and through Prudential, you're able to get a free session. Go to our website and you can be connected to a financial planner to help guide you and give you great advice on how to build wealth. So we're grateful for your time with us today. We look forward to seeing you same time, same place next week.